Welcome back to Explain the Charts. Today, September 22nd, 2025, we're dissecting the recent whirlwind of news and its impact on BTCUSD. The cryptocurrency world is abuzz, with BlackRock continuing its dominance and recent SEC approvals opening floodgates for new crypto ETFs, including spot XRP and Dogecoin products. These developments signal a significant shift towards mainstream institutional adoption, drastically reducing barriers for new crypto investment vehicles. Forbes highlighted Bitcoin topping $124,000 last month, an incredible milestone, yet its early 2025 rally has noticeably stalled in recent months. This comes alongside broader economic concerns, such as Goldman Sachs' growing fears for the US dollar and Elon Musk issuing a stark $37 trillion warning. A particularly intriguing piece of news is the ongoing discussion in Congress about the Bitcoin Act, which proposes acquiring 1 million Bitcoin for a strategic reserve. This initiative, with Bitcoin valued at $115,140 per BTC just last week, could significantly impact market dynamics if it gains bipartisan support. However, this positive sentiment is met with caution, as some analysts foresee potential downward price predictions due to options expiry events. Meanwhile, some reports suggest a massive $9 billion in stablecoins flooding exchanges, which could potentially propel Bitcoin towards $130,000 or even higher to $180,000 to $200,000 by year-end. Now, let's turn our attention to the daily chart for BTCUSD, which clearly illustrates the trends we've been discussing. Looking closely at the period from late July through August of 2025, we can see Bitcoin's impressive surge, peaking at an all-time high of around $123,380 on August 13th. This peak aligns perfectly with the news of Bitcoin topping $124,000 last month, showcasing the market's initial bullish reaction to institutional interest. However, following this impressive rally, we observe a clear reversal pattern as the price struggled to maintain momentum above this level. The subsequent candles in mid-August show strong selling pressure, pushing Bitcoin down from its highs and confirming the stalled rally narrative. This initiated a short-term downtrend, characterized by lower highs and lower lows, indicating a period of consolidation or correction. The critical level of $117,500, mentioned in our news as a point of solid selling pressure, proved to be a strong resistance in the latter half of August and early September. Buyers attempted to push above this, but repeatedly met with sellers, leading to pullbacks. We can identify a significant support zone forming around the $110,000 to $112,000 range, which Bitcoin tested multiple times after its August high. This zone is crucial, as a sustained break below it could signal further downside in the short to medium term. Shifting our focus to the more recent candles in September, specifically around the time the Bitcoin Act was being discussed, we see the price hovering around the proposed acquisition level. The news report mentioned a value of $115,140 per BTC on September 16th, which is remarkably close to our current price action. On September 16th, 2025, Bitcoin closed at $116,764, reinforcing the idea that this price band is currently a key psychological and potentially institutional level. The crucial test for bulls to maintain the BTC price above $115,500, highlighted in our news, is particularly poignant right now. As of September 21st, Bitcoin's closing price of $115,310.60 is just below this crucial $115,500 threshold, suggesting that bears currently have the upper hand in this immediate battle. This indicates a weakening bullish momentum and a potential for further declines if this level cannot be reclaimed swiftly. The price action shows a series of relatively smaller candles, implying indecision in the market following the prior volatility. The volume in recent days has also been somewhat subdued compared to the peak in August, suggesting a wait-and-see approach from many investors. We are seeing a tight range developing between roughly $115,000 and $117,000, creating immediate support and resistance points. To get an even clearer picture of the immediate price dynamics, let's zoom in on the 15-minute chart, looking at the last few days of trading activity. Here, we can observe the microtrends and reactions to these significant price levels much more precisely. From September 19th through September 21st, the price has largely consolidated within a narrow band, reflecting the indecision we noted on the daily chart. We can see repeated tests of the $115,200 to $115,300 area acting as immediate support on multiple occasions. For example, during the early hours of September 21st, BTCUSD dipped to $115,237, finding buying interest before bouncing slightly. Conversely, the $115,800 to $116,000 level has consistently acted as strong overhead resistance in this shorter time frame. Each attempt to break above $116,000 since September 19th has been met with selling pressure, preventing a sustained upward move. The low volume on some of these recent 15-minute candles further emphasizes the lack of strong conviction from either bulls or bears at these levels. A breakout above $116,000 on higher volume would be a short-term bullish signal, indicating that buyers are regaining control. Conversely, a decisive break below $115,200 could accelerate selling pressure towards the lower support levels seen on the daily chart. Traders should pay close attention to volume spikes coinciding with these key levels for confirmation of any breakout or breakdown. Zooming back out to the one-day chart, let's consider the broader bullish and bearish arguments for BTCUSD. On the bullish side, the accelerating institutional adoption, exemplified by BlackRock's massive ETF and BitGo's public filing, provides strong long-term fundamentals. The increasing accessibility through ETFs on major exchanges suggests a continuous inflow of capital from traditional finance. Economist Timothy Peterson's forecast of Fed actions, jolting Bitcoin and alts up substantially, could materialize if interest rate cuts become more aggressive than anticipated. The idea of a strategic Bitcoin reserve by the U.S. government, even if still in proposal stages, legitimizes Bitcoin as a strategic asset, drawing parallels to gold. The speculated $9 billion stablecoin influx, potentially targeting $130,000, also offers a powerful short-term bullish catalyst. However, bearish sentiment cannot be ignored, particularly Peter Schiff's warning of Bitcoin topping out ahead of Fed rate cuts, implying a potential market correction. Concerns about BlackRock's outsized control over the network as its holdings grow could also deter some long-term investors or invite increased regulatory scrutiny. The current price action, struggling below the $115,500 level, lends some credence to a short-term bearish outlook, suggesting a continued period of consolidation or further downside. Global regulatory impacts, such as the EU blocking Russian crypto transactions, remind us that geopolitical factors can quickly introduce volatility and uncertainty. To summarize, BTCUSD has seen an eventful period, peaking around $123,380 in August 2025 before entering a corrective phase. Key price levels to watch include the immediate resistance at $116,000 on the 15-minute chart and the more significant $117,500 level from the news, which has acted as strong overhead supply. The current daily close below $115,500 suggests a short-term bearish lean, making this a critical pivot point for bulls to reclaim. Below this, the major support zone is identifiable around $110,000 to $112,000, which, if broken, could lead to a deeper correction. On the upside, a clear break and sustained close above $117,500, ideally on increased volume, would signal a potential reversal of the current short-term downtrend. Looking ahead, the proposal for a 1 million Bitcoin reserve at $115,140 is a fundamental game-changer, indicating strong potential institutional demand around this price. An unbiased prediction suggests a 60% likelihood of consolidation in the $110,000 to $117,500 range in the very short term, given the current indecision and news catalysts balancing each other. A breakthrough to $130,000 has a 40% likelihood, contingent on the rumored stablecoin inflow materializing and sustained bullish sentiment from ETF approvals. Conversely, a drop towards $100,000 has a 35% likelihood if the $110,000 support fails, exacerbated by broader economic concerns or unexpected regulatory crackdowns. Long-term targets of $180,000 to $200,000 by year-end 2025, while speculative, have a 25% likelihood, heavily dependent on continued institutional adoption, favorable Fed policies, and the successful advancement of the Bitcoin Act. Traders should keep a close eye on upcoming macroeconomic data releases, Fed statements, and any further updates on the Bitcoin Act or SEC's stance on crypto products. Always remember to manage your risk and consider these insights as part of your comprehensive trading strategy. Don't forget to like this video, subscribe to Explain the Charts, and hit the notification bell for more in-depth market analysis.